Hey YouTube, I'm Jimmy. In this video, I'm going to go through the 3 cannabis stocks I think are pretty interesting for 2019. Now, 2018 was a pretty interesting year for cannabis in general because a lot of stocks went public. Canada made it legal, so it's been a pretty chaotic ride. Now, one of the reasons a lot of companies are listing like crazy on different exchanges, both in the United States and in Canada, is that marijuana is gradually getting more legal, like I mentioned, in Canada, but it's also getting gradually more legal in the United States. Different states, I think there are 30 or so, have legalized it at the medical level, and then there's a handful that have legalized at the recreational level. And then just recently, I know President Trump signed a farm bill that had the legalization of hemp in there. So the theory is that it's gradually getting to be more likely that marijuana will be legal at some point in the United States. And if that happens, cannabis stocks and the cannabis industry is going to get larger and larger. And as they get larger, they're going to get more efficient. As they get more efficient, it's going to become more and more interesting for investors. So now our question is, what cannabis stocks do we think are the best? And how much do we think that we can realistically profit from them? So I created this heat map, and this shows different marijuana stocks that are available in either the United States or Canada. The size of the box shows how big the market cap is. The bigger the box, the bigger the market cap. So first, let me start with the problem that I was having when I was doing my research. Let's take this largest one, for example, Weed.cn. That's the ticker for Canopy Growth that trades in Canada. Now, I want to point out that this is by no means all the marijuana stocks. Frankly, they're just the stocks that I could find enough information to do a decent amount of research on. So if you know of any other good ones that I don't mention here or that aren't on this board, by all means, put them in the comments below. So Canopy Growth has done about $94 million in revenue in the past 4 quarters. But they have a market cap right now of about $18 billion, which means that if we were to buy it right here, we would be paying more than 100 times sales. To put that in perspective, if we were to buy Coca-Cola right now, we would pay about 6 times sales. If we buy Netflix, we'll pay about 10 times sales. If we buy Amazon, 4 times sales. And Canopy Growth isn't an outlier in this market. Tilray trades at about 200 times sales. Aurora Cannabis trades at about 85 times sales. So I bring this out just so we're all on the same page. We're not going to find any value stocks in the cannabis market. That being said, I still think that there's a fortune to be made, assuming we can play it correctly. So for me, the question that I was asking myself is there still profit here? And how can we go about achieving a reasonable profit for the risk we're taking in investing in something that's trading so much further above sales or revenue or whatever you want to call it? Okay, so now we know the risks of investing in stocks like this. When this market eventually gets priced like the rest of the market does, many of these stocks are going to fall by like 90% of what they're currently priced at. That being said, I do think that if we can identify the companies that are most likely to thrive for many years, because at the end of the day, it's only going to be a handful of these companies that dominate the marijuana market. And much like the tech bubble back in the early 2000s, well, you get stocks like Amazon or Google to rise out of what happened there and look at what those companies are doing today. So a few of these companies are likely to do very well, but most of them aren't going to. So the time I spent researching these marijuana stocks, well, I was looking for a handful of companies that I thought would be leaders for many years. And ideally, what would happen is they're likely to get bought out by one of the major players in a similar industry. A lot like the alcoholic beverage company Constellation Brands that bought a piece of Canopy Growth. So with that in mind, let's take a quick look at 3 companies that I think will emerge from this whole mania and do well in the long haul. And then at the end, I got a few sort of runner-ups. So our first one, which I think is the most obvious one, is Canopy Growth. Ticker symbol WEED, that's in Canada. In the US, it's CGC. So this is actually where I started my research because I wanted to know what would lead Constellation Brands to pump millions of dollars, billions of dollars, multiple times into this company. Right now, they own about 37 or 38% of Canopy Growth. And with the last round of financing, Constellation bought the option to buy more shares. And if they were to exercise that option, they would end up with a controlling stake of Canopy Growth. Now, when Constellation announced the second round of financing going to Canopy Growth, the stock jumped like 30%. So that's what we're after. And I think that this could happen to a few of the key players. And the reason I went with Canopy first is, frankly, they're a bit safer. Having Constellation behind them is likely to put a floor under what could happen to them from a negative standpoint. They're likely not to fall nearly as badly as everybody else because they have so much money behind them. And this brings us to company number 2. With this one, we're going to go with a slightly smaller company, and that company is Organigram. Ticker symbol OGI. They trade in Canada. So Organigram only did about $12 million in revenue over the past 12 months. But that's expected to jump drastically over the next couple of years. Now, Organigram is a producer of dried cannabis and cannabis oil products. Now, one of the things that struck me about this company is that over the past few years, they've won a ton of awards for the quality of their products. Plus, Organigram has already gathered the necessary financing to drastically increase the size of their production, bringing their production to more than 110,000 kilograms per year by the end of 2019. So what we end up with is a high quality producer that can make a ton of product. For me, this makes a lot of sense for a company like Constellation Brands, or perhaps one of their competitors, to get behind them and invest in that type of company. Because if I'm a giant brand like Constellation, well, I don't need the product, I don't need the distribution. I've already got that. What I do need is I need a high quality product, and I need a lot of it. So when I put my distribution network behind it, you, the manufacturer, can produce a ton of the product we need. Now, this brings us to our third company, Aphria. Ticker symbol APHA. Now, this is an interesting one because Aphria got slammed coming into 2019. And one of the key reasons is that an analyst did a research report, and it turned out that the company was buying assets from management at extraordinarily inflated prices. And once the report came out, well, Aphria's stock dove down about 50%. Well, since then, the CEO and one of the co-founders have announced that they're stepping down. Now, fundamentally, this doesn't change the fact that Aphria is still a pretty good business. In fact, just recently, Green Growth Brands announced that they're going for an acquisition of Aphria. So it's possible that that goes through. And if it does go through, I would expect for it to be finalized at a premium to the current price of about $7 a share. Now, I could have easily added Aurora stock to this list, or even Tilray. But unfortunately, Tilray, of their shares outstanding, it's like 37% or some crazy high number like that of those shares outstanding are held by short sellers. And for me, that made me nervous. One or two things could happen. Maybe a short squeeze comes and the stock pops because they get driven out. But on the other side, it makes me nervous that there are so many investors that are willing to put their money on the line that they feel that the company is that overvalued. So I thought it was best to stay out of it. On the flip side, Aurora, on the other hand, I thought had a ton of potential, and I actually had it at number 3 on my list, but then when Aphria took a nosedive at the end of the month, that just looked like a better value as much as you can have a value in this space. So I left Aurora off the list. So if this list was a list of 4 instead of a list of 3, well then Aurora definitely would have made the list. If it was a list of 5, I probably would have gone with MedMen as the 5th company. That being said, what do you think of these companies? Are these the types of companies that you would add to your portfolio? Let me know what you think in the comments below. Are there any companies that I left off the list that you think will be a leader many years from now? Let me know. If you haven't done so already, hit the thumbs up. Don't forget to hit subscribe. And thanks so much for sticking with me to the end of the video. And I'll see you in the next video. Thanks.